Okay, accounting 122. This is I'm here at my house on Sunday. It's the 6th of September already, Labor Day weekend. I wanted to give you a little tutorial. I had a question. I'm going to make this is my little studio, my upstairs layer, if you will. I'm going to go over a couple of little things in the economy that I wanted to talk to you about, and then for this week that's going to be interesting because Tuesday is going to be an interesting day in the stock market. I'm hoping that you're thinking about what stock that you want to cover over the semester, and I'm gonna make me smaller here, and then I'm going to quickly go over some homework because, as you can see, Erica reached out and said Damon and I are currently working on accounting homework. So I want to make sure that I do that. So I'm going to get out of here and hopefully go into the Wall Street Journal. But let me just show you what's going on. This is what happened the last 2 days in the stock market. This is a piece of software or a website called Seeking Alpha. Alpha is a Greek letter, and it looks like this. You see this, and it refers to in the finance world. It refers to profit, and so Seeking Alpha is about seeking profit or yield in this case. So now you've been through 121, and now we just entered into 122, which in our first chapter, in my first lecture, I talked about using the four different but intermingled financial statements to analyze a company, right? So they start off right in chapter 13 with analysis. Now, what's interesting here is I have a portfolio that I want to show you. No username. Oh, I got to sign into this damn thing? Why is that? Where does it say sign in? Seeking Alpha, sign in. Sign out. Sign in. Sign in. Let's make sure I'm signed in. Okay, and you can get a free account with these guys. Here's my portfolio. I just put this on the 27th of August. So it got hammered the last couple of days. Now you may get an idea for your stock project out of here, maybe. But I put all these on in percentages. I figured out how much of each one I wanted. Now, let's look at holdings. So here's what I have. ADSK, which is a company called Autodesk. I've got 101 shares of that, worth $20,000, $23,000. It's down $8. So my loss in that is that's today's change. Total change minus 4%. So down here, after those 2 terrible days, the whole portfolio was down $22,000. It's a $1 million portfolio, and it's down $22,000. Okay. Am I worried? No, not thrilled, but I'm not freaking out. XRX, VNDA, these are all different. Viva Systems, TXG is 10X Genomics. That's a genome company or a medical company. Twitter, Take-Two. Team is a company called Atlassian Corporation. Square, you may know of Square Inc. Spot is Spotify. Shopify. SDS. Now here you can see this is up. This is like SDS is an ultra short. ProShares ultra short S&P 500. It's what I call a hedge or an insurance policy against downward movements. So that goes up when everything goes down, which is good. ECL is Ecolab, that did pretty well. Extreme, Guardian Health, Google, HEI is Heiko Corporation. Heiko makes a bunch of different stuff. Heiko is a aerospace defense electronics. That's what they do. So anyway, Chewy, Costco, look at Chewy's up in the green here. Ecolab's in the green despite that terrible end of the week last week. BLL, Ball Company. You ever hear of Ball jars? That's what they do, packaging, that kind of stuff. Anyhow, that's what this portfolio right here is what I put together for really rapid growth in the next couple of months. Now, obviously, I'm not trying to sell you something. I'm just trying to show you a list of stocks that I put together that maybe you'd look into. There's Microsoft, Netflix, Intuitive Surgical is a good one, Google, of course. But, pick a stock that you're interested in. And you're interested in a company. Maybe it's a stock. They say, personal investing is about or helped by maybe something about that particular company. You might be up in Aspen working at Lululemon or I don't know. I students come up from all different kinds of angles. Say, well, I work on cars and I find Tesla really fascinating. Is that the future? So anyway, I don't know. As you can see, I don't own any Tesla because it's sort of a mania. What I would call a mania. If you're interested in stock manias, look up the Tulip Mania. It's sort of the benchmark for this kind of lunacy. The Tulip Mania in the Netherlands, generally considered recorded speculative bubble. Well, are we in a speculative bubble right now? I would argue yes, despite the fact that I think these stocks here are going to go straight up starting Tuesday. Tuesday's going to be a big day for me because I have to figure out how much pain I can take in case this market's going to go down. SDS is going to sort of protect me. This SDS stock is like an insurance policy. We call it a hedge, and it will protect me on the downside because it will rise as these stocks go down. But it's not perfect. They're not perfectly correlated. So it's a question mark. Okay. Now the other thing I wanted to talk to you about was in the Post-Independent, real quick, and then I'll show you some homework. Lauren's in the news. Not. It's funny. Lauren was in the news about failure to follow pandemic protocols. They had a fundraiser up in Aspen. I wasn't there, but anyway, I wrote to her and said, "Don't worry about that. That was an excellent time to say I believe in the Constitution. Health departments don't have any constitutional right to come inside a private fundraiser and tell you what to do." So anyway, I thought that was funny. You can read up on that. If you know me from last semester, you know where I stand on that. And there's a reason that I'm the economic advisor to that campaign, because she's a free market lady. But there was something else here about housing. Where is it? Housing was straight up. It's been straight up. But Housing Authority adding apartments in Rifle. No, that wasn't it. Let's look it up. If you don't get the local paper, you could. Yeah, I mean, you should. You should just look at it. There's all kinds of interesting news. Housing for residents displaced. What? Real estate. They don't have a very good search. Where are we now and what has changed? Is that it? I can't believe I can't find this. Bankers Mountain Resorts have been recession proof. Are you kidding me? This is probably too real estate. Where are we going now? And what has changed? No, this was not. Darn it. Now I'm mad. Maybe it was weekend waterways, expected quick response. I should have set this up. Cross-country team's doing better. I'm sorry. I apologize. Active Friday letter. Oh. House prices and shortage. But anyway, it was an article about what's going on in the house market here in town, and what's really occurred is that prices are rising. Well, as you know, we sold this house. This place is going, God willing, and we got some hoops to jump through. But I'm sort of met the people online that are buying it, and or on the telephone, and it seems like I feel like we've got a handshake deal going here. So hopefully it all works out. So Kelly is in the dubious position of having to find us a place to live, like pronto. And my theory was that housing prices are going to collapse. We're in a bubble again, just like 2008. So I wanted to rent. So she's running around trying to rent a place, and she comes back home and says, "What? $3,200 for a 3-bedroom apartment?" And I know everybody's nodding. 3-bedroom apartment behind the meadows, for an apartment. Hey, a beautiful apartment, but $3,200? What's going on, right? What's happening? Now, what you've got to understand is mortgage calculator. Let's say now we're going to get this. Oh, I don't want that one. Mortgage calculator XLS. We are going to make but we're going to get our money out of this house very shortly, and that means that we're going to have some cash, right? Here's the one I want, I think. Yeah, that's coming in Excel. So rents, now remember this relationship. Rents are a function of mortgage payments. They're related. Now, we know from 121, and maybe some of you have taken economics already, the interest rate is related to how you get paid. So how you get paid on an investment. So let's just look. If I can buy, and let's just say we've got $1 million in cash from this house. Let's just say that we said, well, we'll downsize, which is what we're trying to do anyway, and we'll buy a house for $500,000 or $600,000. Let's say $600,000. So a 20% down payment on $600,000 be $120,000. That would leave us with a $580,000 mortgage, right? Now, the going rate for mortgages for me or Kelly is 3.08% over 30 years. Let's even say we're going to get, this is because the Federal Reserve has stepped on interest rates. In other words, the government has said interest rates shall be, by fiat, by force, the government has said interest rates shall be 0. Now, what banks are charging is 3% on a 30-year note. Now, let's just pretend we got 3.25 and over 30 years, 12 monthly payments. This is an amortization table. Well, look at our payment. This also adds in a $100 extra payment. Now I can take that out, put it at 0, just for fun. Here's our payment. $2,500 on a 6,000 square foot or a $600,000 house. Or that would be 125, that'd be a $700 house. Let's say we're at 480, 580, 600. Yeah. So our loan would be 480. Loan, 480,000. Okay. So I popped that in at 3.25%. We have a $2,000 payment, right? Rents are bringing 3,000. So where is the impetus on a 3-bedroom house? And this assuming this $600,000 house is 3 bedrooms, 2 or 3 baths, a little bit of land, whatever. I'm not sure. It depends on what Kelly comes up with here. I put way too much input into this. I should just shut up. The idea that the scheduled payment would be $2,000 and the going rate for a 3-bedroom apartment is $3,200. That represents a massive error in the marketplace. Error. We call it, in the Austrian way of thinking, Austrian economics, we think of that as an error. So what the Federal Reserve has done is forced a housing shortage, right? Due to the fact that buying a house is cheaper than renting. Does that make any sense? Okay, so try and think that through when you get a minute. If I'm on the phone, I don't want to own a house. I do not want to own a house. At this moment in time, I don't want to own a house because I think that we're in a housing bubble. And I think that if we buy a $600,000 house, a year from now or a year and a half from now, whenever after the election everything gets shaked out here, shooken out, how do you say that? There's going to be a downdraft in housing again, like there was in 2008. So the $600,000 house is going to be worth $300,000. Now, do we care? No, we need a place to live. We have the cash. I hate losing money on anything, but it doesn't matter. It's going to be okay. I don't want to buy a house that I keep saying, well, we want to maybe buy a house in that price range that might appreciate and be a more recession proof than, say, this house was, because the $1 million range seems to get beat up pretty bad. People don't want these big giant houses for good reason. I think that's a good, people not wanting big houses means people are being more frugal, and I think that's a good idea. So anyway, I wanted to show you that discrepancy between rents and ownership, because that plays out. Now, a lot of it is regional, and you can go to Detroit and it's different, and you can go to New York City and it's different. Of course, everybody's leaving the cities and they're coming out here. That has an effect. But nonetheless, when we look at the numbers as accountants, we see that discrepancy. Why is there $2,000 for a lease, or not a lease, for ownership, for a mortgage, and a lease is at $3,000? Okay, that's government intervention in the marketplace. There would never be that type of what we might call disequilibrium unless the government was directly setting the price of money. So when I say end the Fed, it's a bumper sticker on my car, end the Fed, get the Fed out of interest rates. That's why you have this discrepancy. And that's why you have inflation in the housing market. So there you go. There's my little tutorial on that. You can find this calculator easily if you. It's a handy tool. Just mortgage calculator XLS. Grab it, use it. But really, what the article was saying that I couldn't find, and I'm sorry, is that housing prices are way out of line. and there's a shortage of housing. And I, of course, attribute all of that to government intervention, and I can prove that to you if you want me to. If you want to discuss it further, I can show you with citations. And Thomas Sowell did a lot of work on this, and other economists. But what does it mean to an accountant? Well, obviously, we're involved in. If you were looking at financial statements like we are today, you would look at financial statements and go, well, should you own land or lease it? Right? Well, if leases are really high, you'd rather own. There's tax advantages to ownership because of interest, being able to write off interest. All of these things go into it, right? So, I mean, you saw this breaks it down by principal and interest. Here's the principal on that loan, right? Here's the interest. The first payment, we will pay $788 in principal and $1,300 in interest. Now you can look down here and watch the interest go up or the interest go down and the payment go up, or the principal go up. So right about here, we're getting to equilibrium where you own more of your house than you're paying in interest. It's getting almost maybe like right along here. So we're talking 104 payments in. That's 2029. So 9 years in, almost a third of the way in, right here's the equilibrium, right? 105 payments, 5/6/2029, which would be what? I don't know. It'd be a long way in. It's like 9 years into that, or 8.5 years into that mortgage. You start paying more principal than you do interest. Okay, that's how an amortization table works. Why? So that banks can make money while they lend money. I mean, they have to, or they wouldn't do it. Okay, I'm going to give a little bit of the homework. If you haven't clicked through to get to the book, let's go like this. If you haven't clicked through, you go to McGraw-Hill, of course, right? Here's McGraw-Hill Connect. Go to my section. And this is my view, so it looks a little different than yours if you're new to this this format. But I wanted to show Erica, and then what did she say? Chapter 10. Let me see if this gives me no. Ugh. Now I clicked out of her inbox. Let me see if she sent this in here. My inbox. Nope. I sent it into my regular mail, which is here. I had trouble logging in today. I don't know why. Look at all this click through on this BS. Now these guys said we were stuck at question 10 and beyond. Okay. Nevertheless, I'll show you the whole thing. I assume they mean homework. So when you click on the homework, here it comes. You see 4 students in progress, 3 not started. I can go into the preview mode and I can show you. Let me see if I'm in the way here. Am I in the way? I'll make me smaller, even though you're okay. Now here's number 1. This is just comparative financial statements, right? Complete the table below. So what happened in here's 1, here's 2, right? And 3. Did sales grow steadily? Yes. Did net income as a percentage of sale grow? Yeah, no. Did inventory increase over the period? Yes. You can tell by these things, right? So if you're new to McGraw-Hill, my numbers will be different than yours. Don't let that bother you. Are we recording? Yes, we are. 25 minutes. Okay, which tells me to speed it up. Explanation: when sales grew steadily, this is for number 2, A, B, and C, requirement 2. Other than that, it just shows you this worksheet. Everybody kind of got this, I'm sure. It's pretty easy to do these trends. You set 2013 at 100%, and then you do this little math trick, right? All right. Ooh. 2, same thing. All right. Not really. We're doing current ratio. Current assets divided by current liabilities equals current ratio. Current assets, current liabilities, right? So here's the explanation. 3. Here's questions 6 to 8 of 16. Here's the information they gave you, and then they ask you for both companies, compute profit margin. Right, here's profit margin, net income divided by net sales. They just want you to understand all these. And let me go through total asset return, return on total assets, net income, average total sales, right? We went over these in class. They're just going to hammer them home on you. And again, I trade every day, and I look at these every day, and believe me, sometimes I got to go, how do you do that again? And so don't think we're in the age of the computer. Rote memorization is. I use my brain to memorize other things than this. So here's the explanation. Barco company, profit margin, total asset turnover, right? Price earnings, all the way down to price earnings ratio here, 22 to 1, right? I think I showed you that thing that's, the mean of the average mean, and the Case-Shiller is 16 to 1. Some people think that we're way out of line. I'm one of them. Acid test, that's the current ratio. Acid test, accounting return, accounts receivable turnover. Inventory turnover, days in sale, inventory, days sales uncollected, right? You want to collect your sales. Identify the company you consider to be better. Now your answer may be different. And here's the explanations here for you. All right. Here's question 8. It's just more of the same. Profit margin, total asset turnover, return on total assets, return on common stock, price to earnings, dividend yield, 3.8%. Not great, but not terrible. And here's the explanations for Barco. Okay, so that's up to number 8. We're getting there for you guys in number 10. Here's 9 through 14. Given this information, and again, my numbers are going to be different, but the ideas are the same, so you can figure it out. Assume that the company's income tax rate 30% for all items. 30. You realize we're at 21. I wish I could draw on this board. I need a smart board in my office so that I can just teach class from my office. That's my goal. I see them I've eBayed them. I've gotten that far with this. I want to be totally independent from the reach of the bureaucratic reach of the school. But anyway, 9, right? Loss from operating discontinued segment. This is a little tricky. Compute the tax effects and after-tax amounts of the 3 items labeled. Those are questions you would get in a corporate atmosphere, or a corporate. Your boss may say, "Hey, what do we do? What happens if we discontinue this unit?" I always use Procter and Gamble or what if we get rid of mac and cheese and just grow and just focus on yogurt. Okay. What the amount of income from continuing operations? B is what is the amount of income tax expense, right? Expense over here, over there. I'm trying to go assets equals liabilities plus owner's equity. Almost coughed. Excuse me. Owner's equity. So those expenses. Remember, they're over when you spread out the basic accounting equation. You end up with revenues minus expenses. Remember, in that owner's equity section. So if you haven't put that up lately, put that up at the top of your page. So you can think in terms of Pacioli's equation all the time. Okay. After tax income from the discontinued segment. Yeah, here we go. Oh, that's the explanation there. So it took this, right, and made and created this out of it. Here's 11. After tax income 16,065. Here's how they got it. Right? This is the loss from the operating a discontinued segment after tax. That's gonna be your loss. Okay, and a gain on the sale. Here's 12. 10 is the one that you guys didn't get, right? Okay, so I gave you some clarity here in the explanation. All right, what's the total amount of after-tax income associated with this discontinued segment? And then the last one, what's the amount of net income for the year? Well, here we go. Continuing operations after taxes, income from the discontinued segment was $1,600, right? $266,329. Well, where did that $16,000 come from? Well, it came from here, the after-tax loss or gain. They actually had a gain of $16,000, right? And we look back up here and we can figure that out. Correction of overstatement of prior year's pre-tax gain on sale of discontinued statement is 43. Income tax 25, right? That would give us our 16. What was it? Gain or loss? Loss from operating discontinued segment. Correction of overstatement. Yes. 30% tax effect. That's a little high, but that's okay. And a lot of times, your company will be very willing to go, hey, we don't know what's going to happen with Biden. Or if you walk in and say, hey, I think Joe Biden's going to win this, your boss might say to you, he or she might say to you, hey, calculate what our taxes would be like. What's going to be our liability if taxes go from 21% where they were. Politicians love to tax corporations because they feel good. And so they said, what if they took it to 40%? Well, what would happen? First of all that money would get parked overseas again. There's unintended consequences. But as you may or may not know, corporate taxes are pass-through taxes. I don't care what any other bogus economist says. Those taxes get passed on to you in higher prices for goods and services. So you're not taxing corporations, you're taxing people. And the corporate tax, I would argue, is a tax on poor people because they feel it. It's what we call a regressive tax. So be careful when guys like particularly on the left, but they all do it. Say, oh, we got to tax Apple more. It's like, yeah, well, then it's just a pass-through tax onto your iPhone. So, okay, there's that. 13 is assume the company's income rate is 30. Compute the tax effects. All right, these are important. as long as, you know, if you're headed towards the CPA exam, these are very important developments for you. Your life is going to be devoted to beating the government out of as much tax as you can. So, which I've got to tell you, from a moral standpoint, I think that's the right thing to do. The more money you can keep, I think the better, or your clients can keep, the better off the world will be. That's just my opinion. But I think I'm right. I could back it up. Explanation to that one, right? How do we get there? Excuse me, I'm having a mint. Number 14, what are the total amount of after-tax income or loss associated with this discontinued? Remember, we took this from up there. That's how we figured that out. The same way. All right, I think that's the end of the chapter. I think, nope, I got one more. 15 and 16. Oh, right, this one's a little bit, it's busy work, but don't let it scare you. You know, reminiscent of last semester. Plum Corporation began the month of May with $1,000,001, current ratio of 2.2 to 1, asset test of 1.6 to 1. During the month, if it completed the following transactions, they used perpetual inventory, right? Look what they did. These are all the things they did. I put this one in there on chapter 13, so it brings you back to, you know, it's like a review. How do I make these entries, right? How would I do this? And here's the explanation down here. Let's give a long look at that. You know, you can press stop. Go, where did that come from? Okay. Right, where did those come from? Stop. And then down here is the explanation to give you an idea of how that calculation took place. Right, current assets, current liabilities, quick assets. Okay, that's pretty good. Pretty simple. It's just a lot of work to get there. You know, it's almost like a sport. You know, where you say, well, if I hit enough wedges, or I hit enough tennis balls, or I hit enough, I'm going to get better at it. And that's what you're trying to do here. You just want to get better at handling numbers, thinking of numbers in your head. This is what they tell for people like me. Here's one of the reasons I teach is that way back when I was drinking myself to death, I came out of it, you know, I recovered, and I said, I got to take care of this brain that God gave me. But if you exercise your brain, it will react to that exercise. It does. So, you know, part of going to school is doing that, and exercising, adding to your knowledge, and then exercising that knowledge all the time, you know, and then you get good at, oh, I'm no good with numbers. Well, if I heard that statement once, I've heard it 1,000,000 times. It's just, that's straight up bullshit. Everybody's good with numbers. Just get good. Um, you can be better. You know, one of the worst things you can tell your child or tell a student is, "Oh, you're okay the way you are." No, you're not. I'm not. I'm much better if I practice. Okay. Current ratio and asset test. Then we go here, days sales uncollected, and it gives you, you know, just once again hammers that home. Inventory turn, days sales and inventory, you know, want this to be low. Debt to equity, we want this to be low, right? We want it to be 0.58 to 1, not 2 to 1. This one, times interest earned, 12 times interest earned. Yeah, that's pretty good. Profit margin, oh, we want it to be high. It'd be great if it was 33%. Total asset turnover, how many times are we turning our assets over? Then we want it to be higher. Return, high. We would like that to be high. And then we have return on common shareholders equity. Of course, we want that to be high in order to entice more investment in our company. Yes. And that's the end of chapter 13 homework. So enjoy Labor Day. I'll throw this up and you can look through it and do the homework. Again, I'm going to throw it up in the discussion tab, but I'll make sure that I make an announcement to that effect. All right. Have a great holiday, Labor Day, and I will see you next Monday in person or on WebEx. Thanks very much.